Alrighty, total and permanent disablement insurance, TPD. So TPD is another form of insurance that is commonly found in superannuation in Australia, but you can also, of course, get it outside of super or even link it together. But total and permanent disablement insurance, we're going to refer to it for the remaining of this video as TPD. So TPD is essentially in the event you are totally and permanently disabled and unable to work due to this injury or illness, whatever it might be, you will be paid a lump sum amount of money to enable you to essentially be able to do the things that you'd want to continue to be able to do. Okay, so when thinking about what is important to cover with TPD insurance, it's actually quite large. Okay, you don't want to just think about the basics again. We went over this in the last video with regards to life insurance. Some people just think about their debts, and a lot of the time they just think about their mortgage, but you really need to expand your thoughts here. So when it comes to TPD, let's just pretend, for the sake of this conversation, you've had something happen to you where you're now wheelchair bound, okay? And this will be for the remainder of your life, all right? And let's pretend in this situation, this person has a wife, okay, and a child. Now, if you've got a mortgage and liabilities, say for example, you've got a home mortgage, you might have a car loan, and you might have some credit card debts or something like this. Now, very important to obviously cover those off, because now that you're totally and permanently disabled, you can't work anymore, okay? So those are definitely some of the most important things you want to think about first. The next thing is probably medical expenses. Now, by no means are these in order to most, important to least important, but, it's usually from the largest to the smallest sort of debts. Now, medical expenses can be quite expensive. Have private health cover or whatever you might have, which pays for medical bills and these sort of things, but you need to think more broad, all right? You need to think about other expenses that might come into place because of this. All your different doctor's visits, maybe buying wheelchair ramps, these sort of things, whatever it might be. Now, home and transport associated costs. This is an important one. I think when we talk about home costs, an important one is home modifications, okay? Now, what I mean by that is, let's just use the example, you've got a basic home, all right? Let's just say it's a townhouse, you're living in the city, all right? Now, that can be quite a difficult home to potentially live in should you be totally and permanently disabled. It may not have the necessary requirements. Easy example again for the wheelchair example is things like ramps. You might not have a bathroom that's adequately set up for that sort of a situation, so you'll have to have it renovated, install all these things, among many other things, okay? So you're going to want to take that into consideration, all right? Education costs, this isn't for yourself, it can be if you want, but what we're more talking about is in this example, you might have children that require schooling costs, education costs, these sort of things. Now, one of the things which isn't talked about a lot is top-up income protection. So with income protection, you might be covered for up to, let's say, for example, for the example of this conversation, we'll just say 75% of your pre-disability income. So let's say you're on 100 grand, that means you'd get 75% of your income, 75 grand, okay? And depending on the benefit period that you've opted for, some people might have shorter periods like 2 or 5 years, or some people might have gone for, the real premier income protection, which is generally up to age 65, okay? Now, if 75% of your income won't do it, because in the event you're totally and permanently disabled, it's likely that you'd be getting income protection alongside your TPD insurance if you had both of them, okay? You may need extra income, because if 75 grand isn't going to cut it to pay for your living expenses and these sort of things, you may need to add additional money into your TPD as a lump sum to account for this. So say, for example, let's say Bob works down at the local factory, he gets 50k a year, something happens to him, 75% on 50k, he's not going to be left with a whole lot. And let's say living expenses are $70,000 a year, he may need to potentially add additional amounts into his TPD to account for this. Tax is another big thing to account for, okay? So there can be quite hefty taxes imposed on TPD insurance, especially if it's held within superannuation, and that can be up to 22%. If not, among other taxes that may be involved. Okay, so it's important to take this into consideration. Easy example here is, let's use that 22% as an example. someone covered themselves. They put, say for example, when they applied for their TPD, they put, all right, I'm going to have $1 million. And then when something actually happens to them and they take that money out, they may only be left with 780 grand or something like this because of the 22% tax. Now, this is all just hypothetical, just easy maths, so we can talk about it in the conversation. But they haven't accounted for that, and now they're short by quite a fair bit to what they thought they needed. Okay. Now, again, other things need to be taken into consideration. One of the really big ones under this other section, which I haven't really gone into detail here, is the potential cost of ongoing care. That's a big one, and is more so provided when you go to see a professional, say for example a financial advisor or something along these lines. They will consider this. It's a hard one to really provide an equation, a mathematical equation for how much you'll need, because ongoing care costs is really more relevant to what actually ends up happening to you. So typically they'll put in an amount. For the purpose of this, let's just pretend you need to pay someone 40 grand a year. So say for example, if you need special types of care that require a couple of hours a day from a care provider or something like this, okay? Now that's a bit of a harder one to put in. So typically you'd go to see a financial planner to help calculate these sort of costs. All right. Now with TPD, there are occupation codes, essentially. There's any occupation or own occupation. Now this is really important because essentially when you choose this, depending on what happens to you, you may or may not get the TPD cover. So let's start with the easier one. Let's start with any occupation just to understand how that works. So let's say Bob is an electrician, all right? A really good one, manager, all right? Now, if something happens to him that he can't go on site anymore, say for example, he loses one of his fingers or whatever it might be, if he has any occupation, total and permanent disablement, if he's still able to do other occupations relevant to what he's able to do, for example, teaching how to be an electrician or, maybe just managing other people, then he may not get the payout, all right? Because it covers any occupation that he would be feasibly able to do. Whereas own occupation, okay, is in the event something happened to him and he's unable to perform his own occupation, the one that he's been insured for, say for example in this case as an electrician, they're not going to say, hey mate, can you still teach, or these sort of things. They're just going to say he can't perform his current duties, that's it, and they'll pay him out, okay? So typically you're going to find own occupation is obviously going to be more expensive, all right, versus any occupation. Now, again, these types of insurances in this video is just the basic video. There's more comprehensive videos we're going to go through. We can see these in a lot more details. Obviously, this video is going to be less than 10 minutes. But we've done one on life insurance, we've done one on total and permanent disablement just now, and we've done a income protection and trauma insurance video, okay? So you see a banner come up shortly. If you want to watch those videos, go ahead, they're great. But otherwise, thank you very much for listening in. Thanks, guys.